Therefore, invest in the only two secular bull markets that exist right now, which is technology itself and blockchain technology. Blockchain has been the fastest adoption of any asset class in history. It was the fastest growth of any technology in all human history, but AI is now outpacing it. So we have to invest in these things. I kind of think of it as investing in our demise as we transition to a new economic system. There's almost nothing that can get in the way of this transition because AI is moving so fast that regulators have zero chance of catching up. And because it's globalized, it can just shift and morph. And so therefore you need the supranationals to do something about it. And that's going to take time. So there's almost nothing to do to slow it down. It's going to change the system. It's going to change how it works, and we can invest in it. So I think we've got 6 years to invest as much as we can, whether it's your brain power or your capital, and both if you can.
Raoul Pal, co-founder of Real Vision and a macro investor, is once again making waves with his audacious prediction of the next big cryptocurrency boom. He contends that a surge might last well into 2026. Pal emphasizes in his most recent market update that all of the key indicators are glowing green, indicating a strong acceleration that is already underway. These configurations have historically led to substantial increases in the value of the whole cryptocurrency market. The interesting part, though, is that Pal thinks Bitcoin's dominance is reaching its zenith, paving the way for a possible shift to Ethereum and other popular altcoins. He also says that Ethereum is in a great position for the future. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
The fact that assets are driven further and further out of most people's reach, and that there was a young cohort and an old cohort that was really going to face a lot of problems. I talked for the young cohort about how cryptocurrency, this was back in 2016, was going to be one of the answers to get them out of this trap. And the baby boomers had more complexities around how they were going to evolve and survive around this situation. I've talked a lot about the rise of digital assets. And then I brought in, obviously, the everything code thesis of how debasement is driving a lot of this. And this is our enemy, an 8% debasement a year, plus let's say a 3% inflation rate. We've got an 11% hurdle rate on our investments, which the S&P 500 doesn't even do. Once trust broke down with the institutions and the system itself after 2008 and 2012 in Europe, that was the birth of Real Vision. The idea was to educate people in that. As I moved forwards, I started realizing the profound effects of the retirement crisis, this baby boom generation. So we have to be very careful in how we protect our wealth or create wealth. This is part of this how to unfuck your future idea. That's based on all of these premises. But there's something much bigger that wraps the whole lot together, and that's the theory of the exponential age. Again, when I came out with the exponential age in 2020, people thought I was nuts. I'm like, this is going to be the fastest growth of technology in all human history. It's going to be the largest change we will ever go through as a species in the shortest period of time. And people thought I was being dramatic. Then AI came, and everyone's like, holy shit. And now the robots are coming, and everyone's like, squared. And now everyone's trying to figure out what this means for society, how this all works, how to regulate it, what to do. But it's moving at lightning speed. By the time this video comes out, I don't know, maybe ChatGPT, I think the strawberry model, the large model comes out. That's coming out very soon. Again, that'll be another step change. We know there's more releases coming from Google, but really we're already hearing that OpenAI probably trained ChatGPT 5 or ChatGPT Next, as it's called, which is a quantum leap yet again, as big as the leap from ChatGPT 1 to ChatGPT 4, when we're getting closer to something like artificial intelligence. And so this video is really about why you've got 6 years left to make as much money as possible before everything we kind of understand about economics, markets, business falls apart. And I can't see beyond that, so I call it the economic singularity. So I think we've got about 6 years for that. It's not a doom date, well, this date it all happens, but it's beyond about 2030 when things are going to become not understandable by using the existing frameworks of economics, financial analysis, markets, and that kind of stuff. AI, the rise of AI, and think of it again in societal terms. What does it mean for humans, for jobs, and all of that? But I think there are more profound implications that come faster that we need to be aware of, and that's the economic singularity. So GDP growth in the magic formula is driven by population growth, productivity growth, and debt growth. So population growth in all of the developed world, including China, we've got falling, aging demographics. Many populations are now shrinking. The US, due to immigration, is just holding its head above water, but the rate of change of population is collapsing everywhere. So that means that the economic driver of population growth has disappeared. Now, we've seen that in GDP because trend rate of GDP has been falling and falling and falling. And it's gone from, in the US, from like 4% to 1.75%. And across the rest of the developed world, it's fallen even further, in most cases below 1%, matching population growth collapsing in those regions. The other side of the equation is productivity growth. Productivity growth is basically units of output per kilojoule of energy, or in other words, what you get out of your cost of electricity. So if electricity is the kind of the energy that makes the world go round, the economic energy, then we need to see what we get out of that energy. So technology has been the big driver of productivity, but the problem is as populations get older, they become less productive. So it's really been a battle, and technology has not won that battle for quite some time. Then we've had debt growth, and I've talked extensively about debt growth. Debt growth basically stops in 2008, and all debt growth is now is servicing of old debts. So that economic engine's disappeared. If you think about the Chinese economic miracle, that was a massive population of, at the time, I think it was 1.1 billion people back in the mid-90s. And what they did was come into the global labor force. The economy of China opened up. That's a massive GDP push. Productivity, well, they built the roads, the railways, the power plants, and all of the stuff that makes China what it is today. That was a productivity boost. And then they increased debt as well. So we had a huge economic boom in China, which we're now paying back with aging population because of the one-child policy. And we've also got a huge problem on the debt side.
At this point in the cycle, global liquidity, as indicated by the M2 money supply, is beginning to increase once more. Additionally, every significant Bitcoin rally in history has followed this same pattern, with prices often peaking a few months after M2 starts to rise. Raoul Pal claims that this isn't merely a coincidence. The most significant factor influencing cryptocurrency markets is liquidity. Money automatically moves down the risk curve as M2 rises, initially into Bitcoin, then Ethereum, and then throughout the altcoin market as a whole. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
How the hell do we solve this? You see, the everything code will just keep repeating ad infinitum, where we just have to keep debasing currency to try and offset the debt payments because GDP growth is not fast enough. So GDP is kind of the economic cash flow that pays for the debts. If GDP growth is low, interest rates need to be low, which is why the Fed are going to cut and all of those kind of things. But also, as GDP growth goes lower, debt growth keeps ballooning, and you have to keep refinancing all of this debt because there's not enough growth to grow your way out of the debt-based economy. But things started changing. Firstly, Amazon, I think, now employs more robots than it does humans. And this is a trend I've been pointing out for some time. Humans are cheaper replaced by robots that are more productive. They don't complain, they don't have unions, and over time, they're much, much cheaper. So the rise of the robots is just starting. We're seeing Tesla with its Optimus robot. We're seeing Figure. We're seeing Boston Dynamics. We're seeing a whole bunch of robotics companies. So humanoid robots really start to replace humans because they have dexterity. So they don't have to be for single tasks, much like machine learning was for single tasks and AI is much broader. We're going to see multitasking robots. So that starts helping bolster the lack of humans in the population. But the robots will take longer to scale. Physical hardware, you have to manufacture it, or you have to design it. We're still at early stage of this. So yes, we will see Tesla robots and others coming into, let's say, factories, but in our houses, it's probably 10, 15 years away, but it's coming. Now, the big lever here is AI. AI is basically infinite human knowledge. Now, why the magic formula works is because we've charged for and created an economic system around scarcity of labor and scarcity of knowledge. So at the end of this decade, this journey from here to now is knowable. We know that the everything code is at play. That allows assets to go up due to debasement. We know that tomorrow will be more digital than today. The exponential age told us that, and is provably so. Therefore, invest in the only two secular bull markets that exist right now, which is technology itself and blockchain technology. Blockchain has been the fastest adoption of any asset class in history. It was the fastest growth of any technology in all human history, but AI is now outpacing it. So we have to invest in these things. I kind of think of it as investing in our demise. as we transition to a new economic system. There's almost nothing that can get in the way of this transition because AI is moving so fast that regulators have zero chance of catching up with it. And because it's globalized, it can just shift and morph. And so therefore you need the supranationals to do something about it, and that's going to take time. So there's almost nothing to do to slow it down. It's going to change the system. It's going to change how it works, and we can invest in it. So I think we've got 6 years to invest as much as we can, whether it's your brain power or your capital, and both if you can, to make as much difference to unfuck your future as possible now. Then when 2030, 2032, whatever comes along, you'll be better prepared because financially you'll have maybe got yourself in a position where you've got the house that you want and some security. Now, as we go through the 2030s, in a world of abundance, we don't even know what money is anymore. So this becomes more complicated. So don't think of it as, oh, I've got my pile of money and everything's fine. It's more about my pile of lifestyle. Do I have the lifestyle I want? Am I protected from vast societal change? And so I think we've got 6 years to do that. 6 years before we don't know how to build a business. 6 years before we can't invest in financial markets. And again, 6 years is not an absolute date, but it's kind of just to give you a rough idea of how urgent this is. This is the most urgent thing.
Raoul Pal gives us a strong but pressing message. It is impossible to break the loop that the current financial system is locked in. Because debt is accruing more quickly than economies can expand, central banks are compelled to continue devaluing currencies. The notion that money printing is the only remaining means of keeping the system together is the everything code at work. Simultaneously, two unstoppable forces, robotics and artificial intelligence, are accelerating global change. Artificial intelligence is spreading information and capabilities at a rate that governments just cannot regulate, and robots are starting to displace human labor. These factors will work together to change society, the global economy, and even how we think about money. Raoul contends that this only provides us only a little window of time, roughly the next 6 years, to get ready. That doesn't imply hoarding money. Rather, it means putting ourselves in the sectors like technology and blockchain, which are experiencing genuine growth and change. These are the two long-term secular opportunities that are both promoting change and providing resistance to it. This is about more than just making money for him. Before the system changes into something completely different, where traditional professions, businesses, and even financial markets may no longer operate as we currently understand them, it's important to secure the lifestyle you choose. In order to avoid having to scramble to adapt when the years 2030 arrive, he exhorts us to act now with our money, time, and attention. The next 6 years are the most significant financial window of our lives. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.